Yeah.
How do you feel about where Alaska is right now?
Sure. And I might chat about the industry for a minute as well, but we announced our intent to merge with Virgin America in April, and we are hoping to close that in the next few weeks. And really, we're doing that because we are so bullish on the industry. We feel like across the board, this is a great place to be. And aviators like checklists. If we were to sort of go through our checklist, we would say, how's the industry doing from a safety perspective? And I think the record is very, very strong from an on-time perspective. And I think Doug Parker made some great points about us being on time against longer block times. But against those times, the on-time performance is much better than it was a few years ago. Customer service we'll talk about, but the vast majority of people that fly with us today, with all of our airlines, are satisfied. They're getting a great experience. Fares are much, much lower. There's fares basically in real terms. They move a little bit around with fuel prices, but they've gone down for 30 years. And airfare in real terms is half of what it cost 30 years ago. Our employees, you can talk to them, but I think jobs in this industry are generally fantastic jobs with good wages, good benefits, and people get to feel like they're part of a team. And then the missing link is what you do cover, Phil, and what we've the investor side of things, and even that has actually been quite good the last few years. So I think companies are making profits, they're making decent margins, they're either paying dividends or buying back stock, returning capital to shareholders. So people always like to sort of be glass half empty or what have you, but I think it's hard to make a case against this industry right now.
Let's talk about something that you mentioned, Mark, which is the amount of investment that your airlines, really all airlines, have made, particularly over the last 7 or 8 years. We've got a slide here that talks about capital expenditures and the investment that you guys have been making. And this is in billions per month. And I know it's a little hard to see from up here on the stage, but I mean, we are now, I believe that's a record high is where we're at. When you look at that, Gary, certainly a lot of that aircraft because of how many have been ordered and what you guys are doing there, but there's so much behind the scenes that it doesn't get the amount of attention that perhaps it should. I mean, people get on a plane and they think, well, it's a new plane, it's a new seat, but it's the guts behind it, correct?
Well, yeah, I think by memory, roughly 2/3 of our capital spending is going for airplanes, and the other third is going for a lot of other stuff. And a lot of that other stuff is technology. In some years, it's airports. So we built a new 5-gate international terminal last year, completed last year at Houston. That was Southwest money. We wrote the check. Now 1 cent of taxpayer money. We're doing something similar in Fort Lauderdale. So yes, there's a lot of investments taking place. I wouldn't walk past the airplanes. We're modernizing fleets. That's certainly the case at Southwest Airlines. We're spending $2 billion a year in addition to returning cash to shareholders. So, and it does show up in the customer experience. You have better airplanes, you have better seats, you have better onboard experiences. We try to measure ourselves from 1 year to the next. And just like you would expect a new car model year for 2017 to be better than the last year, we want to think of ourselves the same way. And sometimes it may be a little hard to measure it in that short of a time period, but I think like we've all been arguing, these investments are real, it's real money, and it's benefiting the flying public, and it's certainly benefiting our shareholders and certainly the economy.
I'd like each of your perspectives on something. Doug Parker, when he finished, he was out in the hallway answering a few questions from some of the reporters who were here. And the question of these these outages that happen every so often with different airlines, which seem to cripple the airlines. He said, look, this is not a matter of investing in the infrastructure because we're all doing that. All airlines are doing it. It's a complexity issue. Would you agree with that, Mark?
Absolutely. The systems that we have are incredibly complex. We're a small airline by comparison to pretty much everybody you've heard on stage from the other airlines. We have 11 million customers a year. They touch us 10, 15 times in various different ways throughout their trip. Very quickly gets to over 100 million individual transactions. Customers expect to be treated uniquely and differently. That's part of the promise that we give them. And all of that lends itself to complexity.
But is that part of the key problem, that it's the complexity of these systems that contributes to when they go down, it takes that much longer to bring them back up?
Yeah, I mean, I think, fortunately, we haven't suffered many outages, but I can tell you when some of the other airlines suffered outages, we weren't laughing. Because we're one circuit breaker away from having to deal with something similar. We do drills, and we believe we can bring things up very, very quickly. The longest longest outage we've had in the last so many years has been, I think, 85 minutes. But the reality is that when you make a booking, you provide an amount of data that populates all kinds of different things, including weight and balance on the aircraft and so on. So when one system goes down, the data that you've generated from that one interaction with us has populated a bunch of other stuff. And because we're safe, because safety is paramount in our industry, if we have any moment in time when we don't know, then the planes don't go. It really is that simple. And that's frustrating for people, I understand that, but better that we be safe.
You know, as one of those airlines that had one of those outages, it's not just the airlines. And I was trying to think of the time span where our lives have become so dependent upon technology. Call it the last 60 years, I don't know. But it escalates over time. And it's escalated very rapidly. And certainly in my 30 years, we had very little technology in 1986 compared to what we have today. So in addition to the complexity, it is the dependency. And that obviously leads to a need to have it fail-safe. And all of those redundancies are in place, but yet there's still the possibility that something may not work properly. The other thing, though, that I think is somewhat unique about the airlines is that our customers are experiencing our product as we are making it. And if we suspend flying for an hour, it's not just a matter of turning the airline back on. It takes time to recover. That's true for any logistics business for that matter. But an online service could go down for an hour, turn back on, and you'd never know the difference. So there are, I think, somewhat unique issues involved with operating an airline and the logistics of getting everything back in place. We've got to work on in the event that we have another outage, which of course we're determined never to have again.
Brad, I wanted to get your thoughts on that as well.
Yeah, I don't have a lot to add. The one thing I might say, just to help people understand it, is if you think about what Gary was talking about 20 or 30 years ago, there were really two systems at an airline. There was our reservation system, our passenger service system. At Alaska, we use a company called Sabre for that. So it was a third-party system with a lot of robustness and redundancy. And then there was the technology on the airplane. And today, there's several hundred systems on top of that. And we have old Sabre technology, you have our airplane technology, then statistics and maintenance and revenue accounting and AlaskaAir.com and our mobile apps and all of these crew scheduling, payroll systems. All these systems have to talk to each other. What Mark was saying with safety, we had to suspend operations for half a day several years ago, and it was because it was a minor system, because all these systems have to speak to each other. And so I totally agree with what Doug is saying. Airlines are investing. Alaska's investing 3 or 4 times what we were investing maybe five years ago in technology, but it is complicated, and we do need to modernize these systems and make these linkages between the systems better than they probably are today.
And I would perhaps just finish off this point by making the following observation. I think for those of you who are reporting on these outages when they do occur, it would be helpful if you distinguish between the computer outage and the consequences of it. Because one of the big consequences you run into is as soon as you have aircraft and crews out of place, with the new, much more rigid flight time, duty time regime that's out there, so-called Part 117, you have very limited abilities to get your pilots to say, okay, we'll just stick around for 3 hours and then continue your
You've
journey.
got a small window, is what you're saying.
And flight attendants.
And flight attendants as well. So that, that is when you look at the downstream consequences of a computer outage, the computer outage may be an hour, it may be 2 hours, it may be 3 hours. Particularly from network carriers, you may well feel the impact of it for 3 days. And that has nothing to do with the computer system. And it has everything to do with the regime around flight time, duty time, and for pilots and for flight attendants as well.
Brad, I want you to give me the first thoughts on the next slide that we're going to put up here.
Okay.
I was talking with the Airlines for America people, and they said, I don't think people appreciate what's happening with employee wages and benefits.
Yeah.
Up 35% since 2010. We got a question earlier today, it was for Hunter K, and somebody said, well, should the investors be worried about what we're seeing with benefits and wages for employees?
Yeah. It's that number doesn't surprise me at all. I think if you look back a decade ago, most of the airlines were in bankruptcy, and employees across the industry, in most airlines, I would say, made difficult concessions. Pension plans were lost, and so wages came down. And then there's been a couple of contracts since then, and those have been pretty good contracts. I think how I feel at Alaska, and how I think almost all of the leaders in the airline industry feel, is it's not just about bag fees, just about low ticket prices, just about returning capital to shareholders, just about what employee pay increases there are. I think if this industry is working well, and if capitalism is working the way it should work, we should be running these businesses well for the long run. And so employees should have a fantastic place to work where they're valued and honored, and they're highly productive, and they feel like they can be part of a company's success. But customers should also get low fares, and investors should get returns on capital. And that's the hard job we have. Whenever somebody puts up a slide like this, you say, wouldn't you like that chart to be higher? Whether it's a return on capital slide, or you'd like fares to be lower, or bag fees to not exist, or whatever it might be. But the challenge that the leaders of the airlines have is to run these companies in a way where the system gets better over time. And whether you're an owner of the company, or an employee, or a customer, you look back over 5 or 10 or 15 years and say, this company's better than it was back then. So, I think most airlines would look at the employee side and say, we're proud of that. That's great. But we're also thinking, what are the decisions we need to make today so that we're able to provide great careers for our people 5, 10, 15, 20 years from now?
Gary, you guys just finished up a couple of new contracts, right?
We got tentative agreements.
Right.
And so, which are in the news here most recently, but we've absolutely gotten some contracts ratified this year also. And I assume that those are U.S. carriers over that time period. I can't read the small print. But I would echo what Brad said about that. And you had bankrupt carriers who had reduced wages. That's the end of the recession. You see profitability being restored, and at least there's some variable compensation in those numbers that would correlate with that. And you have new contracts. We're a very highly unionized industry where you have multi-year agreements that are negotiated periodically, and the negotiations are always vigorous.
But do you see that percentage growth slowing down? That monthly employee wages benefit? I mean,
over a similar period of time.
Let's say over the next 5 years.
If you just took that same time slice looking forward, I would say it depends. So you're coming off clearly a low point, post-recession during the bankruptcies. So I wouldn't expect that you would see that kind of profitability gain, and therefore, profits and pay need to correlate with each other. So no, I wouldn't see that. I think the other thing, of course, that happened, and especially since 2014, is fuel prices plunged, which further accelerated profits. That you're seeing employees benefit from that increased profitability from lowering of fuel prices also. So by inference, I'm also not predicting that you're going to see fuel prices plunge over the next 6 years.
Well, everybody knows they won't stay low forever. Nobody's saying that they're going to go up right away, and nobody can predict when.
But I think that that's a key variable as well.
Mark, from your perspective, do you see that trajectory moderating a bit?
Yeah, I would imagine so. As an airline executive, you always expect to see it go down the other side, but it never does. But in seriousness, I think we have a responsibility to try and improve the standards of living of the people who work at our company, and we're very proud of the fact we've been able to do that. To square the circle between improved employee compensation and lower fares, what we have to do is to be more efficient. Some of that efficiency comes from newer technology aircraft. Some of that efficiency we hope to gain, as you've heard earlier, from things like ATC reform. Some of that efficiency needs to come from work rule changes in our collective bargaining agreements. And at least Hawaiian as a company, we've always been willing to trade improved wages and benefits for greater ability to use our employees effectively in the front lines. And so when you see that chart, you're seeing the dollar signs. Hopefully, if there was a way of adjusting it for productivity, you'd see something that more moderate, so the employee's winning and the company's winning at the same time.
We've got one last slide that we want to show you here, and this is the one that when I was talking with the Airlines for America people, they said, we don't get enough appreciation, we being the industry, for what's happening here. And this basically shows that real airfares remain low. And we've talked, each of us have talked in the past about this. Gary, you guys obviously know about low airfares, and it's been your bread and butter, and you've shown that you can be profitable with those low airfares. From where you are standing right now, do you sense that we see those low airfares on the same plane where they are, or do you see a slight increase, let's say, in the next couple of years?
Prospectively?
Yeah, for the industry.
Well, yeah, we've tried to make a living out of low fares, and we know that more people can afford to fly. It's a very discretionary product, if you will, in consumers' minds. So the lower the price, more people can fly. If you got low cost, it's a very virtuous cycle. So the objective would be to keep costs low, participate in the growth of the economy, maintain fares in a consistent way, and be able to drive profits accordingly. We're all competitors, and clearly the competitor that is going to prevail over a long period of time is the one that has great service at the lowest price. And I think that's what certainly a low-fare carrier like Southwest is striving to be. Some airlines don't strive to be the low price. They have a different product offering and would argue that because there's this increased value notion that you ought to pay more. And that's all fine and good. But I think most travelers would welcome low fares for a sustained period of time, and certainly the stability. But that is a great chart. I would certainly endorse the notion that airfares are great value, especially on Southwest Airlines.
But Brad, I mean, there's your commercial. Brad,
I've got more if you want.
Certainly, a little bit later on. Brad, from your perspective, and you look at these airfares, at the same time, look, there's so much capacity that has come into the system that has driven down these airfares, and not exactly in the most profitable fashion. Is that a concern that you have right now, how much capacity has come into the system?
Yeah, I think the capacity, and people were talking about this on an earlier panel, I don't want to say it's not a concern, but I think that tends to work itself out. I think the capacity, the revenue, that's more of a shorter term phenomenon. I think these airlines are run by good business people that want to run them in a balanced way where customers get something, employees get something, shareholders get something. So yeah, if there's too little capacity, too much capacity, I sort of think that works itself out. I wanted to not give Gary the only chance to make an advertisement for Southwest Airlines.
There you go.
Go ahead.
Yeah. So, I mean, a big change at Alaska Airlines happened 10 years ago when we sort of realized that customers want low fares. And institutionally, we realized that. In the old days, there were there's revenue management systems and all these, and the company sort of wanted fares to go up. And it's natural to want a price increase. But I'll just tell you, success began to come to us when we said, our customers want low fares. What if we get on their side and try to offer them low fares? Costco, the guy that runs Costco, a guy named Jim Senegal, we brought him out to our company a couple of different times, and we sort of looked at Costco's fantastic growth, and it's been a great story for employees and shareholders, but that's based on offering customers great quality and great fares. And I'll just again, to not give Gary all of the limelight here, I just sort of want to say that I think when people look at this industry, they should see that there are a lot of us out there that want to bring real value and low fares to our customers, and we're realizing success in our businesses because of that.
Come on, Mark.
There you go.
What I was going to say is these guys are, of course, pitching you on the basis of fares, but I know you all want to come to Hawaii. So,
You've got them trumped.
So, yeah. But
Okay, if you insist.
yeah. But what I would say is I think there's a lot of narrative out there in the industry at the moment about airlines are doing this to fares, airlines are doing that. We as a company, we are, the market gives us the fares that the consumer is going to pay. And within that, we have to find a value proposition and a selling message that's going to draw them to us. And we've been fortunate the last 10, 15 years, we've been very successful at doing that. But the notion somehow that an airline or a group of airlines sets the fares, I think is an entirely false premise. It's a competitive industry out there. I can tell you that in terms of our internal considerations, there is no meeting where we sit down and say, what are we going to charge today? It's always a conversation about what fare is the market giving us and how do we make ends meet within that general environment? How do we maximize, for sure, using revenue management, our ability to use the demand curve that's out there. But the notion somehow that the industry sets fares or the industry is driving fares up, I think is an entirely false precept. And when you look at that year 2000 to now, you can just see how wrong that is.
Brad, I want to start with you on this question and this topic. And when I was talking earlier with Chris and Hunter, we discussed how low the multiples are right now for airline stocks. And I know that the smart thing to say as an airline executive is, hey, just perform, turn the profits, and the market takes care of itself. But when you talk with, whether it's analysts or investment firms on Wall Street, what is it that they're not getting as far as the message, in your opinion, about not just Alaska, but the airline industry right now?
Yeah. You know, I think it's, to me, it goes back to the question you opened with, is the industry better or is it not? You know, for most of our careers, it has been a cyclical industry. When the good times were okay or maybe even great, and the bad times we coughed it all up and asked for help and labor concessions and bankruptcies and all of that. The question that I think, just to give the analysts their side of it, is a valid question, is has this industry fundamentally improved? Have there been structural changes that make the future better than the past? And I believe it is. I'm not saying I think we are going to be cyclical. I don't think the cycles are gone, but I personally believe the future is going to, this capitalism has been working. All these companies have gone through painful, excruciating changes to improve the health of their companies in the industry. So I think the future is going to be better. But that may, I don't know this, I don't think I would use the language, that's what they're not getting. But I think investors are waiting to say, okay, let me see how you do. Let's see what it looks like, what your performance looks like with $2.50 fuel or $3 fuel, $80 barrel fuel, $100 barrel fuel. What is going to happen with all of these labor agreements? What if there is a weakening in the economy? I think they're just sort of waiting. And candidly, that's, in Alaska, the way we think is you didn't want me to go there, but we don't want to get too distracted by the stock price. We want to run the business for the long run, a fundamentally good airline, be safe, be on time, good value, low cost, good profits. We care a lot about profits, and we do sort of believe that the stock price will take care of itself over the long run.
Mark, do you agree?
Yeah, I think the crucial thing that Brad said there that's worth focusing on is things have gotten better in a dramatic sense over the last 5 to 10 years. During that period of time, we haven't really had one punishing recessionary period in our industry coming out of since the bottom of 2008. So I think there is an open question of how will we fare in the downturn. I have confidence that the industry is going to fare a lot better. Therefore, I'm bullish on where the industry is going. I'm bullish that, in fact, when we look back after the next full cycle, people will say, wow, I'm not sure why we were as anxious as we were. But I suspect we won't entirely dispel those fears until we've ridden through that cycle and demonstrated to one and all that the industry has, in fact, changed. But I, for one, am bullish that we have.
It's interesting, Gary, he mentions whether you guys can handle the next recession. An analyst told me that about 3 weeks ago. We were doing a story on airline stocks, and he said, I need to see that these guys can handle a recession.
Well, I think there's a couple of fundamental needs going into a downturn, which will inevitably happen. You know, the cyclicality of our business is not gone. We're just in a pretty nice, long, steady cycle here, and especially with the fuel price support here over the last couple of years. Historically, the low-cost airlines are the one who did better. And if you just think about it from a sheer profit margin perspective, it works like a shock absorber. Here's revenues, here's cost. Revenues come down, but not such that it flips. If you've got a really thin margin, it's just not much margin for error. I think it's really that simple. I disagree with Mark just a little bit because the low-cost producers tend to set the pricing. It's a more theoretical point, so I don't entirely disagree with his point, but I think everyone understands that revenues are going to somehow attract towards where the costs are performing, whether it's oil and gas, whether it's an airplane seat. The other thing are balance sheets, of course. You know, how much liquidity does a company have? How much fixed obligations are there when cash flows start getting pressed? And you just need to have a very strong balance sheet and be prepared for the unexpected. Have a line of credit in place and so on. The industry was ill prepared on 9/11. Nobody saw it coming. All of a sudden, we're not flying. You just have to be prepared for those kinds of shocks to the system. Heaven forbid that they happen. But I tell you what, the recession in 2008 and 9 was really bad. What I remember for us, I don't know about these guys, but we had a 15% reduction in unit revenues, unprecedented in airline history. And most airlines were losing money that year, and several were instantly bankrupt. So it's just hard to see these things coming. I think reflective in the multiples is not necessarily a prediction that bad things are about to happen. But fuel prices have come down by 50%. Who's to say they won't double in the next year? Because there weren't many people who really saw that coming.
Nope.
So it is very difficult to manage this business precisely over a medium term because there are so many things that can happen. And I would just reinforce that it is ultra competitive and as competitive as it has been in decades, primarily because the industry is so healthy and at these cost levels and these fare levels, people see opportunities to grow and outcompete one another. So that's where we are. I think that's a very good thing for consumers. Brad mentioned earlier as an airline manager how we need to try to balance these things, take very good care of our people, serve our customers very well. If we can do those two things, the shareholders ought to be well taken care of. And I think Southwest is good evidence of that with our performance over 45 years. But all those things have to be balanced, including the rate at which we grow. That all has to be factored into your question as well. Going into the 1991 recession, airlines were growing very fast and ran right into the teeth of that. And it was a brutal 1991-92. It pays to moderate the growth and be sure that that is taking into account the possibility of these other things happening. And to the extent that we can just be consistent from one year to the next, think of ourselves as a manufacturing plant, growing airline seats. It's nice to do that in a steady way, as opposed to trying to grow the airline 30 airplanes one year and shrink it 10 the next. That just creates havoc in the organization that's so people intensive. So all those things
All of them go
have
together.
to go together.
Mark, I want to shift gears a bit and get your perspective since we're winding down the panel here in a bit. The overall flight experience, from your perspective, not just with your airline, but overall, when you talk with people, not just in the industry, but neighbors, friends, what do you think is the biggest challenge right now with that flight experience? It's no doubt improved, but where would you say, I think this is the one area where the industry still needs to improve?
I think it's airports. I mean, ATC, as Doug discussed in his keynote address, the problem is that once you schedule assuming that you're going to have a degree of delay, then you set the expectations, and so you don't sort of create that sense of not delivering what you promised. But I think where you have increasing difficulties today in terms of the experience of our customer, our guests coming to the airport and getting on the aircraft, we have security, we have more people traveling, which is a good thing, but it means that facilities are more crowded than they used to be. Some of the facility constraints drive a less individual experience and a much more sort of public experience than was the case certainly 30 years ago, more than 20 years ago, more than 10 years ago. So I think the airport experience is an area where it's hard to control for airlines because we don't control every aspect of that, and it is an area where I think we lose some of the sort of goodwill and expectation that the customer has coming to travel.
Separate from the airports, Brad, what would you say is the one area that the industry,
About to agree with him. Yeah, I mean, one thing I might just to chat about a little bit, airlines are making big investments in flights. In our own case, we've got new overhead bins that have a lot more space. We have movies on board. We have in-seat power at every seat. The food has been plussed up the last couple of years in both the main cabin and first class. Micro beers in the back and nice wines in front. So airplanes are fuller. That's one reality. For the industry, I think folks are 85% full, roughly, something like that. And there's not a lot you can do about that. But anyway, if I can, Phil, not go exactly where you want, I do think one aspect that Mark didn't mention, and Admiral Neffinger is definitely part of the solution, but the TSA experience, that gives people, it gives people pause. And it gives me pause when I go to the airport. Will I be able to rush through the line, sort of zip through pre-check or not? So I think that's a big thing. The other thing is ATC congestion. That's going to become a bigger and bigger deal to Alaska as we merge with Virgin America and move into San Francisco in a bigger way, which has got a lot of ATC congestion. So I think air traffic control, those sorts of delays, and TSA sort of line holdups are a couple of things that we need to be working on. Airport facilities is another. A lot of these airports were built 20, 30, 40 years ago, and if you look around our country, a lot of the airports, it actually is time for some upgrades to the physical space.
But the knotty problem, though, is air traffic control.
Well, so let me ask you this. Everybody knows it's the problem. Everybody knows it should be changed. Everybody in the industry, generally speaking, wants it to change. We've interviewed some of your congressional leaders in your districts or your state senator or the senators from your state, and they've said, yeah, we've got to fix it. And yet, it continues to be this uphill battle.
Well, just to finish off on your last question, I think the number one issue is the air traffic control system. And so it can get slowed down to keep it safe. And then, like Brad said, we can schedule a flight to be on time that takes 50% longer than it otherwise could. Sure, we can do all of that. We're trying to grow our country. We're trying to grow our economy. More people want to travel. Your chart showed that it's as affordable today as it has been over the past 20 years, and we won't have the capacity to support that growth. I don't necessarily disagree with Mark about some of the airports A lot of airports are just fine and in great shape. And at least that's something that can be addressed in most cases. We can invest in our in-flight experience. What we seem to be unable to do is make any progress with air traffic control. We've got Mark's a pilot, he knows better than me, 1950s, maybe even 1940s technology. Why is that? We need to reform the FAA. And we need to evolve the FAA so that it is run like a corporation where it can match its funding needs to the funding sources and over a long period of time have consistent leadership where we can follow through with these complex long live programs. Without this, I think we're going to continue to make very modest progress. You could have much better experts than me describe the benefits of improved routings, but they are dramatic. And in terms of the climate change challenges that we face and the desire to reduce carbon emissions, that is the single best idea we have, and the ability to execute that rests with our federal government. We can, and we will re-engine our aircraft fleet over the next generation. It'll reduce fuel burn by 15%, but it will take us a generation to completely replace our fleet. The single best idea to improve greenhouse gas emissions would be that. And it will take reform of the FAA to realize air traffic control modernization.
We've got 1 minute left, and I want to go along the line for each of you here. Within the next 4 years, regardless of which party wins the election, the White House, and then controls Congress, do you think we get the reform, the ATC reform?
Oh man, it is a rough battle. We will, as Doug was saying earlier, we're not going to give up on this. But the opposition is frustratingly fierce. And my biggest concern, not necessarily over a 4-year period, it's hard to say over what time period, is when do you reach the point where you just can't grow air travel in the U.S.? And I would hate to look back and say we totally messed this up. So it may not happen in 4 years, but it won't be because we aren't going to continue to advocate for that kind of change. As you know, the support for ATC modernization is unanimous. You can't find anyone who disagrees with it, at least in theory. It's the notion that, well, I don't want you to touch this little piece that I have. It's the tail wagging the dog that we've just got to make sure that people understand the risk that we're taking here. It's not a safety risk. It's a risk that we won't be able to grow air travel, and that would be a real shame.
Mark?
I don't feel particularly in a good position to be able to answer that for the following reason. I think it's a political question and not an airline or industry question. I think this makes such sense at so many levels that the impediments to getting it through go to the difficult political environment that we have nationally on any number of different issues. So I think that question is more one best aimed at people who have strong views about how politics is going to resolve itself on the Hill and in the administration going forward than it is to an airline executive.
Brad, last word to you.
Yeah, just to keep our panel interesting, I think we get it done. I think I agree with these two guys, but I think it is a good idea on its face. It's a good idea. I think we come together and we get it done.
Thank you, gentlemen.
Yeah, thank you, Phil.
Thank you.
Well done, sir.
Thank you, Gary.
Always a pleasure.
It was fun. Well done.
Well done.